All right, well, good afternoon, Joe.
Good afternoon, Mike.
All right, so we are here live at Oak Hill Country Club. And welcome to the Mortgage Update with Mike and Joe. Obviously, we are just super pumped about this week that's about to take place here in our own backyard. This is going to be the 105th PGA Championship that's being held right here at Oak Hill, and we couldn't be more excited to be sitting here.
Yeah, a lot going on.
And a lot going on. You guys might be able to hear some of the last-minute construction that's still going on to get the event and to get the location prepared. So again, as we embark on this, I think one of the things that I just want to share, Joe, with our group is that this just reminds us that Rochester is a big golf town.
Yeah.
And one of the things that we actually found out and that we learned is that Oak Hill is the only American course to have hosted all of the major championships here, including the Ryder Cup that was held back here in 1995. I was here for it.
Were you?
Awesome. I actually saw Freddie Couples and Corey Pavin chip in. It was a really, cool event. So
yeah.
Oak Hill is looking great. It's looking grand, and we're super excited about it.
And we are, where are we right now, Mike? I know you mentioned it when we got here.
We are right here on hole 13, the Hill of Fame hole. It is probably their signature hole, and probably one of the, if you do come out, you definitely got to, take some time to get to this hole. It is probably the best hole here. I mean, they're all great.
Yeah.
But it's one that you really want to take the time to come out and see. You'll see some great shots, and you get some great views as well.
Yeah, it looks like it's a great setup back there.
Yeah.
So
Joe, obviously, this is going to have a big impact on Rochester. Maybe you could kind of speak to the impact that the community can expect.
Yeah, so there was an article recently, Greater Rochester Enterprise put out that this is going to have about a $200 million impact on the local economy.
Yeah.
You're talking about $110 million in just direct revenue.
Yep.
Another 41 in indirect, and then 37 million in spending. And they say that 40% of the ticket holders are coming from out of town. They need hotel rooms. Over 6,000 hotel rooms have been booked. And crazy enough, and now I understand why, the event is creating 1,200 temporary full and part-time jobs here at Oak Hill, right? And you look around, there's got to be just behind us, I can count 20 people.
Yeah, it's
right?
awesome.
So it's great. It's a great impact on the local economy, and it'll be a great week. We're excited for it. So
yeah. I should have, I think, mentioned this at the top of our podcast. So Joe and I are wearing these GRB bucket hats. So we're actually modeling them on the behalf of GRB. We've got our logo on here. As you guys can see, the bank started in 1996. So just wanted to make sure that I got that out there as well. So
Mike,
Joe,
I think they may have been drunk when they made yours.
Yeah, exactly.
Yours says 9661. So
yeah, exactly. I've got this is the first one that they made.
maybe you're supposed to be standing on your head.
Yeah, sometimes I feel that way. Hey, so some other news. Obviously, we always, during these podcasts, during the Bills season, we talk about the Bills. We make predictions, and but in news, the Bills season just got released. Anything there, Joe, that you think is
schedule got released? It sounds like it's going to be a lot of late nights. 6 primetime games, so night games, Sunday night, Thursday night, Monday night games, opening the season against Aaron Rodgers at the Jets on 9/11 down in New Jersey, not New York. But that'll be an interesting
That's going
way
to be a
to
big
kick off
game.
the season.
That's going to be a big game.
And we got some our rivalry games. Luckily, we got the Dolphins coming to Orchard Park in October instead of us going there with the Heat. And then some late season games. That's a tough schedule.
Yeah,
It's tough. So
it is.
It'll be
well, you know what?
interesting how things fare.
I think that as a result of that, you like to think that they'll be battle tested going into the playoffs.
Yeah,
So
absolutely. And, we have, after this event ends, about a month later, we get to see the Bills come here for training camp, right?
Exactly.
That kicks off in usually late July at Fisher, so 2 months away, I guess. But, and home opener against the Raiders.
Yeah.
So that'll be a great atmosphere there.
So-
So exciting things coming.
All right. So listen, let's segue into mortgage. Again, this is I think this is really cool news, and I think a great sign of where things are going is this is the first time that that the 4 agencies that basically provide the governance for our industry are all being led by women. And I think that is something that I think is speaks to just the ongoing leadership that women provide, and I think it's something that I just wanted to point out.
Yeah, that's big. I mean,
Yeah.
and like you said, it's where are we going as a country, and for the first time in history, right? That's impressive. So that's great.
It is. So Joe, let's talk about the local housing market. Obviously, this year, continues, to be, obviously we talk about it on every podcast, that the inventory is low, and it has increased a little bit since the last time we did this, but still at historically low levels. So maybe you can kind of put some data around that to
Sure.
what we're seeing now.
Yeah, so the buyer demand, continues to outpace the inventory, and we're seeing that over and over again when we look at the numbers. In April, Monroe County was going, again, based on the data that we collect as a lender, on our transactions that we processed, the average was almost 16% over list price was where contracts were getting accepted. Still seeing the buckets, still seeing that the hot pockets, and then looking down the throughway to our partners in Onondaga County, their numbers are interesting. So they started the year 8% over asking in January, dipped into the 4s, and now are back at 9% over asking in April. So we continue to see that over ask. I mean, I'm continuing to spend a lot of times vetting out appraisals and trying to get ideas of where things are going to, how high of an offer can a borrower write on a property, and take that time to help them write their strongest offer that they can. And we're just seeing that same consistency until we see that increased inventory where it's the inventory starts to outpace the buyer demand. We're going to continue to be in this environment. Interestingly enough, when I look at the chart, this April, when you look at this on a graph, is almost identical to last April. So if history repeats itself, which tends to do, we are due come late May, mid-June for a little dip for the summer, and then come back up towards the end of summer. So we'll see where things go, and all of the agents we're talking to are expecting a strong finish. We're hearing a lot of listing activity starting to generate, and we'll see where things go.
Yeah, I think last year at this time, I think because as the market continued to provide sellers with a great time to sell their house. Now, as these transactions begin to close, your neighbor just sold their house for X. You've been thinking about it. Now you've heard the news about they got how much for their house. And I think that type of FOMO, if you will kind of continue to go throughout the marketplace. And our hope is that more and more people will list homes. We also are seeing, Joe, as folks that are willing to list their house and they don't necessarily know where they're going to go in terms of their next buy. So we do see people that are willing to list and then potentially rent and then see what takes place, because who knows, to your point, where this market's going to go.
Right. Yeah, and we're seeing more short-term housing. I think people are looking at how do we create spaces where sellers can go after they sell their house for a month or 2 months, test out living in the city for a little bit, or in Canandaigua by the lake for the summer, who knows, but just trying to find different solutions for those things.
So Joe, obviously there's been a lot of news in our industry regarding fee changes and whatnot.
So we're gonna do a little game here, Mike.
Okay, I'm ready for a game.
You ready for a game? All right, I'm gonna give you 3 news articles,
Okay,
headlines, grabby headlines.
okay, I'm all ears.
And there's 2 of them that are true, 1 of them that's a lie. And
Okay.
I want you to pick out the lie. So, and I'm grab my notes here. So first headline is, Rochester, New York was the country's hottest housing market in March for the 2nd month in a row.
Okay,
Second one is, good credit home buyers soon face penalties as bad credit receives benefits.
okay.
And the third one is, housing market tracker, inventory finally rises.
Joe, obviously I'm in the industry just like you, so I'm going to say that the second one's a lie.
That's correct.
Okay.
So, this has been a very hot button item for a little while, right? These LLPA changes that the FHFA has rolled out. And those news articles saying, poor credit gets you a lower mortgage rate. And, we've heard from people, I'm going to stop paying my credit card so that I can get a better rate on my mortgage, right? That's not necessarily true. So there's a chart out there that they've been using with this grabby news article that shows the changes that are actually coming into play. And what they've done is they've actually reduced some of the changes for somebody with lower credit, and then maybe increased a little bit of the adjustments for somebody with stronger credit, but the baselines were different to begin with, and then the final outcome is still different. So when you look at somebody that's a 780 credit score that is putting 20% down, if you look at just this chart, that 780 is paying 0.125% of a fee higher than they were before.
Not in rate.
Not in rate,
fee.
just in fee.
Yep.
But somebody who's less than a 640 is actually paying 0.375 lower than they were before. So they're not getting a lower adjustment. They're just paying a little less than they were previously. Now, if we look at what those actual adjustments are, for a 780 plus credit score, the adjustment has gone from 0.25% to 0.375%. For that 640, that adjustment went from 3.125% to 2.875%. So still a lot higher than that 780 credit score. So, if you're listening to the podcast, don't stop paying your credit cards and ruin your credit so you can get a lower mortgage rate, because it's not going to help you.
Right.
So we are seeing that. But that was one of those grabby headlines that without the proper clarification on there, you'd think, oh, well, then why am I doing all this hard work to pay my bills on time, right? And
So Joe, really, so what's taken place here, there's been a couple of tweaks to some of these buckets, if you will. I'm referring to the bucket hand, to these buckets. But at the end of the day, someone with a higher credit score is going to get more favorable terms than somebody with a lower.
Correct. Okay. Correct. Yes. So things haven't changed.
Right.
There.
Oh, okay.
But one of the positive news articles that came out this week was the FHFA originally with these changes and by the way, these changes have been in effect in pricing already for a couple months, because for us as a lender, it was based on our loan delivery date where these changes were going to take into place. So we really had to make changes to our rates 2 months ago in order to be able to deliver those loans after May 1st. One of the changes that they had originally announced with this was somebody with a higher debt to income ratio was going to have an adjustment that was a little bit higher if their debt to income ratio went over 45%. A lot of lenders, mortgage bankers associations, everybody kind of lobbied the FHFA to stop these changes because it was going to create a poor customer experience and an operational nightmare of trying to capture any time that ratio changes throughout the loan process. So the good news is that they rescinded that change. So this week they announced that they were going to rescind that change and not move forward with it. So one win for the good guys, right? The ability to not have to deal with that. So
that's great news. That's great news. So Joe, let's go back to the market, and obviously every day we hear frustrations for buyers, and then the realtors, the lenders that work for the GRB, and in what we've been doing, you and I have been doing a lot of, is how do we try to set buyers up for success in this marketplace? And, obviously what we've been trying to do, with a lot of the workshops that we've been doing is we've been trying to share pertinent, real-time data on what's going on with each of the zip codes and the markets that we work with in both Onondaga and Monroe County, to educate and inform not only the realtors but the buyers, the sellers, on what is occurring in regards to properties, what they're being listed for, what they're being sold for, and what they're appraising for, so that people can really feel like, okay, at least I'm aware of what just took place the past 30 days. Can you maybe kind of share, Joe, as we move from kind of moving out of the spring into the early summer months, what can we be doing with our realtors to get those buyers prepared for success? And then along those lines, just to reiterate, what is the difference between a pre-qualification, a pre-approval, cash plus, and how we do that here at GRB?
Yeah, so the education is so key right now.
Mm-hmm.
How many buyers, anybody that wants to buy something, right? You go anywhere, you're always looking for a deal. You're looking for, can I get this on sale somewhere else? The internet has become our worst enemy, right? Because
Mm-hmm.
anytime you go to buy something, you're like, oh, let me go check on Amazon to see if I can get it cheaper. Let me go check over here, and this was not the market for that.
Mm-hmm.
Clearly, the data that we have, and one of the things we've been hearing from a lot of agents is, I'm telling my buyers this. We're telling our loan officers to also have that same conversation with the buyers. Hey, this is what the market is like.
Mm-hmm.
If you want to succeed, this is what you need to do. And just reiterating that message, hearing that same message from more than one person is so important.
Right.
So really partnering with one another to have that same conversation with the buyer, so they're not out there trying to, bid $10,000 under ask when we know it's going to go 40 or 50,000 over.
Mm-hmm.
So that's important. The education piece and really having that customer as informed as possible. When you talk about pre-qualification versus pre-approval, so at GRB we recently rolled out a full underwritten pre-approval program. So a pre-qualification is, and we see this a lot with some of the online lenders, right?
Mm-hmm.
I went in, I filled out my application online, and they pre-qualified me for a purchase price of X. Well, when they did that pre-qualification, they may or may not have looked at your pay stubs. They may or may not have looked at your bank statements. And most times they run credit.
Mm-hmm.
So they've looked at your credit, but they haven't verified anything, right? So nobody's looked at that and said, let me calculate this income and see what it actually calculates out. Let me verify that there were no large deposits in your bank statements, et cetera, so there's no surprise at the end. So with that pre-qualification, it could go as, a little, you could have an income calculation in there, or you could be going off what the borrower says.
Mm-hmm.
You could have an asset review, you could be going off what the borrower said. Those are done by the loan officers. Typically, they're done sometimes on the fly, right? We got to write an offer by 5, and it's 2 p.m, and I got to get a pre-qual letter out. The loan officers will do their due diligence, make sure the borrower qualifies, and move it on. With the pre-approval program, that's fully underwritten. So our pre-approval program, we are completely underwriting that file. That loan is being looked at by an underwriter.
Mm-hmm.
The borrower is basically going through the full mortgage process ahead of time.
Mm-hmm.
The rule with pre-approvals is that you cannot have any conditions other than subject to finding a house and a satisfactory appraisal if you need one, right?
Mm-hmm.
So, and when I say if you need one, that means that if the buyer has some extra money and they're willing to guarantee the appraisal or cover if there's a shortage between
Right.
what they bought the house for and what it appraises for, they can guarantee that appraisal, and then that commitment letter is only subject to them finding a house at that point. Those are fully underwritten. There's no surprises. There's no gotchas. The underwriter has calculated the income. They've reviewed the assets. They've looked for any surprises. And we are doing that across the board for all our borrowers. They have to put their down payment has to go down as an earnest money deposit.
Sure.
That's the requirement, which is money they're going to put up forward anyway.
Right.
And then you have our Cash Plus program, which is the same thing, right?
Mm-hmm.
We've fully underwritten it. The borrower, in this instance, has agreed to put 10% down
Mm-hmm.
and 10% as their earnest money deposit.
Right.
So with the pre-approval, they could put 5% down and put that as their earnest money deposit. It actually still gets the same full underwrite and scrutiny that the
Mhm.
Cash Plus program gets. But it allows us to eliminate the financing contingency for those borrowers that are willing to guarantee the appraisal. And
Joe, let's just on that topic,
Yep.
just so that everybody knows, because there's been a lot of chatter about this. When in the contract it states that the buyer is willing to quote unquote guarantee the appraisal, can you give an example of kind of what that means?
Yep. So in this market, because of where the homes are being listed, let's say a home is listed for $200,000, and I want to write on that house knowing that they're going 30 over ask at 260. So I write my offer at 260, and I say in my contract, listen, if the home does not appraise, I, the buyer, am willing to pay the difference in the appraisal. So let's say that home appraises for 250. The buyer's responsible for that $10,000 appraisal gap, and they've said in their contract they're willing to do that. Now there's some things that we can do. So we sometimes will reach out to appraisers and we'll say, hey, I got a buyer that wants to write on this house at X. Where do we think this house would appraise? And they'll get back to us. And that helps us to prepare the buyer for how much of a gap do they need to cover.
Because the appraiser is going to have a sense of what comps they're going to use.
Right. They do some research on the market. What are the comparables that are out there? And then we look at that and say, okay, we think that, they come back and say, we think this would appraise at X. So, and then based on that, we can advise our buyer, hey, just so you know, this is where we think this house will appraise. It could appraise higher. It could appraise lower. It depends on who the ultimate appraiser gets assigned on that order. We can't control that, right? We have no control over that. Because it goes through our management company and they at random assign it out to an appraiser. But with that research and that due diligence, we know what comps are out there and we know what type of value we can support, so the buyer's better prepared at that point, right? And there's instances where we do our comparable check and they say, you know what, yeah, 260 is reasonable. There's these comps out there that support that value. Or they may come back and say, well, it looks like it probably appraised more like 240. Here's the comps, here's why. And then we can better prepare the borrower and understand, do they have the additional funds to cover that? And a lot of times if they do, we're able to show those proof of funds in the offer to show they have the ability to cover that gap, should there be one.
Well, Joe, we're coming to the conclusion of our podcast here. I just got a text from my good friend John Rahm, who wants to have lunch with me because I'm here at Oak Hill today, so I don't want him to have to wait for me, and then we might go out and play a few holes. Me and John go way back. So
you may get tackled. I'd like to see that. We should probably keep recording in case that happens.
So, but we want to thank everybody for tuning in. Today, Joe, thanks as always for just a lot of great intel. We're super excited about what this next week brings. And until next month, we bid you guys adieu. Thanks.
Thank you.